stocks stuck in a holding pattern. Crude oil back now at $113 a barrel, and the US dollar is still the world global safe haven. What is the next catalyst in the markets? Let's dive in. Okay, Clifford, the 25-year trader, back with another Monday night futures market open. And what a week it was last week. Lots of stuff going on. And so let's take a look first at what we have coming up this week before we dive in to what's coming next. So taking a look at Forex Factory, as always, I like to use the weekly calendar here just to go over what's happening. So as we see, tomorrow's Tuesday, durable goods coming in, FOMC minutes, that's going to be important. Whenever you see red, that means high volatility. So definitely be paying attention at 2 p.m. PCE, that's the Fed's inflation indicator that they watch. We've got some GDP numbers here as well. Canada employment change, if you're trading the Canadian dollar, definitely take a look at these on Friday, and finally CPI, which is going to be high volatility on Friday at 8:30 in the morning. All right. So last week I had mentioned that I believed that we were getting a little oversold here on the S&P 500. So let's take a look at the markets this week. What happened? And as we see, we had the profit-taking rally, kind of like I call this a bear market rally, and I think it's still bearish as long as it holds below here. This level here, this 66.80, and on the NASDAQ, this one right here, about 24,541. On the Russell, same thing about here, 2575 roughly, and on the Dow as well, resistance here. Taking a look at the energy sector, crude oil, I mean, it's getting pretty intense now. You know, we're up to $113 a barrel here. And there's only been, like, if you take a look at the historical crude oil chart for crude futures, we hit $150 a barrel back in 2008, and we hit 130 something dollars a barrel back in 2022. 2008, of course, was the global financial crisis. 2022 was the Ukraine-Russia war. So it appears to me like we're going to test this high probably. I mean, no one has a crystal ball, of course, but if that straight remains closed, I don't see why it couldn't test 130, possibly even the 2008 high, 150. And if it goes beyond that, I mean, then it could cause serious implications in all these markets. So we'll just have to wait and see how it plays out. But other than oil, we have the US dollar. And I had been watching this last week. I had mentioned that it broke above resistance twice here at 100, then again 100. And as you see, like these dips are holding. So why is the US dollar the safe haven currency this time? No one knows for sure, but I believe it has to do something with the US dollar is like the global reserve currency, and in times of fear, investors flock to the dollar. Sometimes they could flock to gold too, but if the Fed is not going to cut interest rates, then gold may not be that appealing. Sometimes they could flock to bonds. Sometimes they can flock. There have been times they flock to the yen or the Swiss. Like you just never know. But at any rate, it appears the dollar is the safe haven at the moment. So we'll have to keep an eye on that. And other than that, pretty much taking a look at the trends, I believe that oil is still in an uptrend here. And if someone, as far as wars go, whether as a trader, I'm looking to try and be profitable, right? In different scenarios, in rising markets, in falling markets, in good economies, and also in bad economies. There are opportunities for traders. Um, so if you're a trader, definitely, you want to watch your risk right now because there's a lot of uncertainty out there, and you definitely want to be careful. I trade mostly the futures market, but I do watch also some of the stocks as well. And there's a lot of uncertainty right now. So if you're going to trade this type of environment, you definitely can be profitable, but just watch out for you. I'm gonna sound like a broken record because every video for the last, a lot of videos, you're gonna hear me say, use risk management. And the reason I say that over and over again is because, you know, in the past 25 years, I've seen many things, and I've seen, profitable scenarios where great years, profitable years, but then I gave it all back because I didn't use risk management. So I'm telling you, it is so important to use your risk management. 1 to 2%, stick with it. Don't don't deviate from that, and in the long run you'll see the results. Um, but what if you're not looking to trade? What if you're just looking to protect yourself in this kind of environment? Well, I mean, it's one of those things where, some people be like, "Oh, well, I'm just going to stay in cash right now. I'm just going to put all my investments into cash. I'm going to sell this out, sell that out, just sit in cash." Yeah, some investors do that. Some investors might feel that gold is protection for them, and they want to buy physical metals or something like that, or bonds, or whatever you decide to do. But or some people will buy puts in the stock market, because they're like, well, if there is going to be a crash, I want to be able to protect protect my portfolio from that crash, right? So there's many different scenarios that you can do, um, and every investor is different, every trader is different. But as far as speculating goes, I would just say, yeah, use risk management, be careful. All right, so what else we got here? So let's take a look now how these banks and financial institutions are positioned right now, real quick. Let's just take a look at that. So looking at the stock market, uh, and again, every Friday they release this report, the commitment of traders. So right now they were short the Dow about 6,000 contracts, not over short though. But let's see what else we got. Now here they've been buying the dip on the S&P 500 on the way back up. That could be a sign that they're going to reload their short positions. They had about 38,000 shorts here. I wouldn't be surprised if they reload them. We'll just have to wait and see. On the NASDAQ, they were somewhat long, but not like overextended long or anything. And on the Russell, kind of just, they're closing contracts on the way back up, it looks like. Over to the energy sector, real quick. We got crude oil. And this is why it's so important to watch the COT report, because if you don't watch the COT report, I mentioned in one of my other videos, you're trading blind. You see how here they had 59,000 contracts long, then they increased it to 76,000 contracts, then they increased it to 97,000 contracts. Now they're up to 220,000 contracts. So you want to be aware of these things. Why? Because if they're increasing long positions and you're trying to short them against this, ocean tide of growing long positions, that's like basically, swimming against a riptide. So keep an eye on these positions here. Very important. But right now they're at about 218,000 contracts long. But again, I don't think they're overextended long yet, especially with the war scenario, because look, back in, 2018, they were like at 750,000 contracts long. So again, something to keep an eye on. I'll be definitely watching that. Over the gold market, they're kind of like still long here, about 170,000 contracts. They took some profits here at 250,000. Now they're back to 170. And then real quick on the currency side, the euro, they're kind of neutral. See how they're at 0. The pound, they were short. They kind of closed a few shorts there. The yen, they're starting to get short, 72,000 contracts short. I'll keep an eye on that. And then the CAD, nothing going on there. The Aussie, the Swiss, They were really short the Swiss here. I was watching this last week, but now they kind of pulled back a little positions there. And finally, in the US dollar, they're starting to increase their long positions, which kind of goes with that break above resistance. If you watched, this is important here. I mentioned this last week, the flip. See how here they were short 5,800 contracts short the US dollar. But then now, boom, they flipped to 3,000, 4,000 contracts long. If you're not watching this stuff and you're a Forex trader, you're basically like up the creek without a paddle because you had no idea that the banks and the financial institutions just flipped from short to long. Is very important information to know. And it goes perfect with, look, they flipped from short to long and you got a break above resistance. That looks kind of to me like the US dollar is in a bullish breakout. Two breaks above resistance here, a flip from short to long, short to long here. I mean, why on earth would would I want to short the dollar right now if the banks and financial institutions just flip to long, plus there's two breaks above resistance? So these are the type of things that I like to take a look at and kind of like put the pieces together of the puzzle. And finally, in the grains, real quick, check out the grains. So here they're kind of like getting overextended on corn, but they pulled back a few positions here. I believe, though, that if oil continues to rise, you're going to see the grains rise too, because they use corn, soybeans, and wheat for energy, like the ethanol and all that other stuff. Fertilizer, like there's a lot of stuff happening with that too. So definitely pay attention to that. And finally, in the bond market, they're still short. So as we see, they're still short the bond market as well. So in summary, I would say this week, me personally, I'll be keeping an eye on the um, the durable goods for tomorrow, FOMC minutes for Wednesday, core PCE definitely once again, Canadian dollar and the US dollar CPIs. And as far as my trades go, and again, this is not trade recommendations, always trade at your own risk. I'm still looking to enter a small short position on these indexes. If I get a little test above resistance here, I will probably enter a short trade like around 25, getting close here, 25.58, 25.57 on the Russell, S&P 500 close to resistance. And again, I would try and put my stop somewhere where it's not in danger. So if I'm going to try and short it here, I need my stop at least 50 points away, right? So that way, hopefully I don't get stopped out and I target maybe the lows. If I'm risking 50, I try and make 100, right? 2 to 1 or even 3 to 1 or something like that. Very important, always use risk management. However, if you're going to try and buy the dip, then I wouldn't recommend trying to buy the dip until it tests support, maybe somewhere around here, like 63.70, you know what I mean? That makes sense. But again, watch out because when these profit taking rallies end in downtrends, a lot of times you could see the trend resume. Like as you see now, the NASDAQ, it bottomed out here, rallied pretty hard back up about 1,400 points. But the bears could come back in if you're still long here and push it all the way back down. So just use risk management. Always be careful when you're trading. And yeah, that's about it for this video. If you guys like the video, enjoyed the video, feel free to like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And as always, my friends, never risk more than 1 to 2% of your equity on any given trade, whether you're trading privately or whether you're using a prop firm account. That is the way to survive in the long run. Good luck this week, guys.